Have you ever wondered about the global shift away from the US dollar and the increasing interest in gold as a reserve asset? In today's video, we will delve into the reasons behind this fascinating shift, explore the countries involved, and discuss the potential implications for the future of the global financial system. As we navigate through this topic, it's essential to understand the significant role that the US dollar plays in international finance and the recent movements of countries actively seeking alternatives. The US dollar, comprising approximately 60% of the global currency value, plays a significant role in the international finance. What's more, over half of all US dollars are held outside the United States. This prevalence stems from two primary factors. First, the widespread use of the US dollar as a reserve currency by central banks worldwide. And second, its dominant position in the pricing of oil in dollars for international trade. However, in recent years, an increasing number of countries are actively avoiding the use of the US dollar in their trade transactions. They have been actively seeking alternatives for the US dollar. These countries are entering into bilateral agreements, opting for currency swaps, conducting trade settlements in their own currencies, establishing alternative financial systems to settle payments directly, or establish new systems to bypass the US dollar entirely. Let's take a closer look at some of these countries and their efforts to avoid using the US dollar. Countries such as Iran have faced US-imposed sanctions for attempting to bypass the dollar. In response, they decided to sell oil exclusively in euros. However, Iran was banned from the SWIFT system, which facilitates international wire transfers. Nevertheless, other countries have prompted them to explore and to develop alternatives to SWIFT that don't rely on the US dollar. One such alternative is the CIPS, China's cross-border interbank payments system. Iraq and Libya have expressed interest in diversifying away from the dollar, with Iraq considering selling oil for euros and Libya exploring the possibility of a gold-backed dinar to facilitate oil sales. In addition to the efforts to avoid the dollar in trade, there has been a significant increase in physical gold accumulation. China, in particular, has been accumulating an immense amount of gold, signaling their beliefs in the eventual decline of the dollar standard. Many countries are showing upward trends in gold accumulation, recognizing its enduring value and potential as a safeguard against the uncertainties of the fiat currencies. Furthermore, we have witnessed instances of gold repatriation, where countries like Germany and Venezuela have sought to retrieve their gold reserves held in the USFED. This repatriation movement reflects a desire for greater control over their precious metal holdings and a shift away from relying on external custodians for their reserves. To understand the courses of events, let's examine the key developments that have led to the potential demise of the dollar standard. In 1971, President Nixon's decision to end the gold-backed Bretton Woods system marked a significant shift in the international monetary system, establishing the dollar's dominant role. Since then, various events have indicated a movement away from the dollar. For example, Iraq's choice to sell oils in euros, the 2008 financial crisis leading to increased interest in gold and silver, and Iran's decision to cease oil sales in dollars and accept commodities instead. In Turkey, they exchanged local currency for gold within country and subsequently export the gold to Iran, effectively trading oil for gold. Similarly, Libya has also sold oil using gold dinar as the currency. The US Federal Reserve's implementation of successive rounds of quantitative easing measures, such as QE2 and QE3, have raised concerns regarding the future of the dollar and inflation. Quantitative Easing 3, or QE3, in particular involved massive currency printing, starting with $40 billion of currency per month, plus $45 billion each month, and later increasing $85 billion per month, surpassing $1 trillion annually. In response to these perceived risks, countries such as China and Russia have taken steps to bypass the dollar by entering bilateral trade agreements that facilitate direct debt settlements using their own currencies. These actions further highlight the diminishing confidence in the dollar's stability as a reserve asset. Moreover, the rise of the alternative international payment systems has also contributed to the shift away from the US dollar. An example of such a system is a cross-border interbank payment system, or CIPS, which has provided alternative mechanisms for conducting international financial transactions without relying on the US dollar. These systems enable direct currency swaps and settlements, allowing countries to bypass the traditional dominance of the dollar in cross-border payments. The recognition of silver and gold as legal tender by states like Utah is among the events that highlight the growing trend away from the dollar. Additionally, bilateral trade agreements between China and Iran have allowed them to bypass the use of the US dollar. Venezuela and Germany have repatriated their gold reserves, although Venezuela faced legal challenges as London's High Court ruled against its repatriation. Moreover, countries such as China, Japan, India, and Brazil engaging in direct trading without relying on the US dollar further underscore this shift. Some African countries have even banned the use of the dollar, with Zambia enforcing penalties, including potential imprisonment for using the US dollars. Meanwhile, Singapore removes taxes on bullion, the name for gold and silver coins, and citizens in various countries, including Germany, Netherlands, Ecuador, Austria, and Switzerland, demand for the repatriation of their gold reserves. China's acknowledgement of a fundamental market shortage of gold, along with the increasing rate of currency printing by the Federal Reserve, further contribute to the narrative of the dollar's potential downfall. China's persistent accumulation of gold is worth noting. Over the years, China has significantly increased its gold holdings while reducing its US Treasury bond holdings. This strategic move signifies their belief in the eventual end of the dollar standard, seen as a means to protect their economy and mitigate potential risk associated with the future of the dollar. As countries continue to diversify their reserves, seek alternative payment systems, and accumulate gold, the stage is set for a potential shift in the international monetary landscape. It is important to recognize that the transition to a new monetary system is a complex and multifaceted process. Its implications will be far-reaching and will require careful consideration and preparation by individuals, institutions, and governments alike. These developments are accelerating and unfolding in the present. Time is of the essence, and the window to adjust financial strategies is narrowing. While it is not a prediction of the end of the world or doomsday scenario, it is clear that a transition to a new monetary system is inevitable. The built-up energy within the current system demands release, and when it comes crashing down, it will likely lead to a significant wealth transfer. Whether individuals choose to participate or not, this wealth transfer will affect everyone. Holding paper assets and currency represents a bet in one direction, while holding physical assets like gold represents a bet in the opposite direction. Understanding the potential consequences of this wealth transfer is vital for everyone, as it will impact them, regardless of their conscious involvement. The future holds both challenges and opportunities. As we witness the ongoing developments and shifts away from the US dollar, it becomes evident that being prepared for the future is of utmost importance. By staying informed and making informed decisions, you can position yourself for a smoother transition and potentially benefit from the evolving financial landscape. And that's it for today's video. If you find this information valuable, don't forget to like and subscribe to our channel for more topics uncovering a wide range of financial topics. Until next time, stay informed and be prepared for the financial shifts ahead.